We want to talk about the construction industry and the particular segments that are being impacted. We all know the significant business disruption this has had. The projects are being delayed, so there's supply chain issues, the changing operational protocols, whether it be with your workforce, how to deal with people not showing up for work, or are you an essential service, you're not an essential service, health and safety concerns, all those things are on top of our minds. And last but not the least important, significant cash flow and financial pressures are being put on all our businesses and projects. And these changes are happening rapidly, they're happening daily. As we speak, we've been updating our commentary today, so we'll talk about those things. In terms of our objectives for the presentation, we will review with you the elements of strong business continuity plan and crisis management practices. We will discuss how to mitigate impacts as we move forward, both from a financial and an operational perspective. We'll also talk about potential cash flow management strategies you can deploy from various angles, whether it be from government support, tax incentives that are being provided, and other liquidity type issues. At this time, to kick things off, I'll pass it on to my colleague Kyle to discuss effective practices in the crisis management and business continuity space.
Excellent, thanks, Chayton. So when it comes to crisis management and business continuity planning, there's 4 key pillars that we're going to talk about today. And this is really with the intention of leading to an effective response as it pertains to COVID-19. The first aspect that we're going to talk about is deploying a crisis response team. This is the team of individuals from executives to project leads that will be responsible for all crisis-related responses. The second key element we're going to talk about is business continuity risk assessments, being able to effectively triage and build plans to effectively work through a crisis in the best way possible. The third element is communicating effectively. Communication is critical to any crisis response, and this is no different than with COVID-19. Especially how information is changing so fast, and as Chayton mentioned, daily. We're going to explore some key things to consider as you deploy your communication plans with your employees and with other stakeholders. And lastly, we're going to talk about planning for impact. So how do you effectively plan financially for what's to come? So let's first start with deploying your crisis response team. The goal of any crisis response team is to implement a coordinated, timely, and effective response to the crisis situation at hand. In this case, we're talking about COVID-19. Executive leaders must determine immediately what their key success factors are when working through this crisis, and what those key success factors should look like when the pandemic is over. An example key success factor for a construction organization might be keeping the worker safety as a top priority. While these aren't easy questions, it's best to set a baseline up front so that as leaders, you can communicate across the organization what success looks like, and there's a good understanding of what those top priorities are as you begin to triage and address COVID-19 related business disruptions. An effective crisis response starts with your executive response team. This team should be made up of critical business roles and functions that include representation from operations, HR, IT, legal, and communications. I can't stress enough how important it is that everyone's on the same page, and you need to ensure that you have all the right representation in the room to be making those decisions in a very effective way. Once decisions are made at that executive level, you then need to determine who will be tactically executing and implementing the plan. You're trying to answer who's responsible for turning decisions into actions. This is where tactical leads and cross-functional response teams are formed. For the construction industry, we're seeing the formation of COVID-19 job site task forces to ensure that communication and health and safety protocols are being implemented and followed at the job site level. This is where we're seeing a rise of issues and concerns, and where we see it as pertinent importance to ensure health and safety protocols are being followed at all times. A few key checklist items for you to consider as you assess your own crisis response teams include the following. The first is, do you have crisis management guidelines and procedures to support timely and effective decision making? What's critical in a crisis is to ensure that you know what to do and what protocols are going to be followed. Sometimes those procedures and protocols are long-winded or detailed. Others are pretty quick and they're almost like guiding posts. But it's important to have some level of guidelines and procedures established. The second is, do you have response teams with defined roles and responsibilities? Do individuals at the executive team level know what they're responsible for? Do tactical leads know what they're responsible for? Are individuals are individuals at the job site aware and understand what their requirements are? The third question is do you have prepared crisis communication messaging that can be readily deployed moving forward? We see a lot of organizations prepare almost canned messages that can be at least built upon in the time of crisis to push comms out quickly. Again, each message has to be effectively tailored for the situation at hand, but having a baseline to get started is a lot easier than opening up a blank page. And lastly, have you created a construction site crisis response team or teams? And if so, have you defined their roles and the 360-degree communication process? Do individuals at the site level know how to communicate up through the organization just as much as information flows down? As we move forward, we're now going to shift gears to talk about conducting a business continuity risk assessment. This is really answering. Okay, I think we're back. So talking about business continuity risk assessments, this is really answering the question, how do you continue to operate to the best of your capabilities given COVID-19? What are your minimum service levels? What are your essential versus non-essential operations? You're trying to really determine how can you best move forward or continue forward given the impacts of COVID-19. When conducting a business continuity risk assessment, it first starts with identifying the potential internal business risks given the impact of COVID-19. You will need to assess all aspects of your business to determine current or potential impact. What is the level of impact? We see a lot of organizations start scoring issues or concerns in a similar fashion across the business. They might create a rating score of 1 to 3, with 3 being the most critical. It's an easy way to start assessing which aspects of your business are most critical versus maybe perceived as critical but aren't as important. We highly recommend, as you go down the path of looking at business risk, is that you try your best to look at all aspects of your business under the same light. The second step is to determine which aspects of your business are truly mission critical. For instance, accounts receivable and accounts payable. This is really to keep your money moving. What job sites, construction projects are most important? Which ones can be delayed with minimal contract breaches or minimal financial costs? Step number 3 is to determine the minimal service level to continue operations. How many workers or what types of workers do you need on site? Do you need in finance? Do you need in IT? As we work virtually, what is the minimum level of corporate information that you require? What do you need to do to make payments and receive payments? Can you move things to electric fund transfers? Other things to consider is approval. How are you going to approve construction changes, budgets to plans, etc.? And lastly, when you conduct a business continuity risk assessment and you're at the final end of it, is to generate a plan and start with your core services. Ensure that you're generating a plan that allows you to continue moving forward. Looking at things a little bit more specifically, we're going to dive into some operational considerations facing construction organizations with regards to COVID-19. There's no doubt that COVID-19 is having a profound impact on operations. Given the hour presentation, we're not going to dive into everything in detail today, but there are quite a few items that we want to focus in on given today's changing environment. The first is with regards to workforce availability. Given COVID-19, it's important to plan how your workforce will be affected. We're seeing a significant change in job scheduling from our clients right now, ensuring there isn't individuals crossing shifts to minimize the impact of COVID-19 cases amongst the workforce. Another thing to consider would be cross-training. Can you identify resources that can work on different aspects of your projects? Can you cross-train or find subcontractors to support if your team resources fall ill? Another critical question is what is the minimum level of staff required to keep critical elements of your projects moving forward? This is especially pertaining to a project's critical path. Another element to confirm is what is the availability of subtrades? What are their protocols? Given health and safety concerns on job sites right now, it's becoming increasingly important to review your subtrade protocols as well to ensure that you're maintaining a safe work environment on the job sites. Moving from workforce and subtrade availability and looking at supply chain and third-party risk, it's critical to understand what those availabilities of your construction materials are. What will be the impact on project timelines and deadlines if you cannot obtain the expected materials? Can you diversify vendors to receive materials from various parties in a better way to, again, diversify your risk? Reaching out to key suppliers and third parties right now is extremely important to really understand how their businesses might affect your business. A few other key things to consider is what are your mission critical projects, and what can you do from a supply perspective to ensure that they move forward? From a project management perspective, it's important to consider reorganizing project workflows and scheduling to also mitigate delays of the critical path, allowing for early ordering and delivery of materials if the supply chain is at risk. This could be also about potentially storing more deliveries off-site if it's possible. If work on all or projects must be suspended, you want to make sure the project sites are properly protected and secure. Also, you need to make sure that you're checking your payment processes and ensuring that the payment cycle is not impacted. Are payment certifiers still planning to attend on site to certify work, or is there some accommodation required? If so, have you made the appropriate plans and implementing those accordingly? For project management, to be honest, right now it's about documentation. I cannot stress enough to document as much as you possibly can. It's so important to segregate COVID-19 related changes, delays, and impact compared to normal course project delays. You will need to carefully and precisely track the impact of COVID-19 on specific projects themselves. Maintain a paper trail and ensure that you're maintaining that paper trail consistently across your projects. One item that we did really want to dive into is with regards to health and safety protocols. Given the fact that construction has been deemed an essential service across numerous provinces, and we're already starting to see COVID cases pop up on sites, such as the Young Eglinton Crosslink project in Toronto, we thought it was important to spend a little bit of time talking about health and safety considerations. There's no doubt that we're in unprecedented time, and it's likely that your health and safety policies and procedures may not effectively capture all related pandemic or COVID-19 concerns. We highly recommend that you update policies such as fit for duty, sick leave, etc., to address diseases and hygiene protocols. This should include what to do if someone begins to experience symptoms on site. What are those protocols for staying home and quarantining due to travel or being exposed to someone with COVID-19? Once protocols are established, it's imperative to implement government measures and those new protocols, such as social distancing and best practices as it pertains to hygiene. For example, routine hand washing, adding temporary wash stations to job sites, reducing the number of workers on site, wearing PPE at all times if it's safe to do so, and maintaining social distancing requirements on site. As mentioned, we're starting to see the establishment of on-site COVID-19 task force. These individuals are responsible for ensuring health and safety protocols are implemented immediately and continuously being followed. I would look at your own organization and say, what are you doing to ensure that those health and safety protocols and those considerations are taking place at the job site level? Chetan, I'll pass things off to you to talk a little bit about contract stipulations.
Thanks, Kyle. So moving from health and safety to the other side of the business, we all rely on other organizations to ensure our construction projects are completed on time and on budget. These contracts are being impacted severely, whether it be with suppliers, customers, owners, subcontractors, trades, what have you. You need to understand and determine actions on these contracts as soon as possible and prioritize them. The key thing to understand is what contracts you do have in place and which need to be taken action on. So our guidance would be to review those contracts, understand what is your organization's responsibility and risk for the conduct of subcontractors and suppliers. If any of them suspend or terminate their subcontract, what are the risks to the whole project? Will it fall like a stack of cards, or do you have plans in place to mitigate the impact? From a timing perspective, parties should also pay attention to contract notice provisions. As a reminder, under the CCDC2, a delay requires a contractor to give prompt notice of a delay claim within 10 working days of the commencement of the delay to rely on an extension under the contract. Now, whether some of these there may be some leniency on these, we're not sure yet, but understand what those contracts are telling you. And understanding the terms and conditions and really staying on top of the governmental directives and how whether the directive to be an essential service or to shut down is impacting your contract. Just a reminder, I'm not a lawyer, no one on this call is from BDO. This is not legal opinion in terms of the contract stipulations we're talking about. It's really from a business perspective, from a business continuity perspective, that these are some of the terms you should be familiar with as you're discussing these issues within your operations and eventually seeking legal advice. So some of the terms that we'll talk about, quickly touch upon, one of the major ones in the construction world is force majeure. Most construction contracts have a force majeure or allowable delay clause of some sort. In the standard CCDC contract documents, these may include government orders and events beyond the contractor's control. COVID-19 could trigger a delay claim under such provisions. A force majeure event generally means an event beyond the control of the contracting parties. A force majeure clause in a contract may excuse parties from non-performance and protect them for the consequences of a late or delayed performance. But key thing is it would not cover them from, or not excuse them from price increases, which may make completing the contract more expensive. So check your contract terms to understand the specific definitions of what is a force majeure event or allowable delay and what is not. The occurrence of a pandemic will typically not be sufficient for a claim on its own. There must be an actual delay, and there must be direct causal link between the event and the specific work. Typically, the event must render the work impossible to perform. Review the exact wording of your delay-related contract terms. Each force majeure clause or allowable delay clause will be different. They'll be triggered by different events and have their own different procedures. This is where good legal advice comes really in handy. With respect to the COVID-19 pandemic, most force majeure clauses will not literally include the words such as epidemic or pandemic. You may notice terms like unavoidable labor shortages or something similar like that, which may trigger this clause. With respect to impossibility of performance, one thing to note is economic considerations are generally not a relevant factor, and an alternate method of performance could prevent a party from relying on a force majeure clause, even if it is much more costly. As an example, are the party's employees ill due to the virus and unable to work, or simply afraid to work and choose not to attend? From a notice perspective, check and carefully follow the notice requirements of the contract. Prompt notice of a possible delay is likely required in order to be protected by a force majeure clause. Now, if a force majeure clause is not in your contract, then a default treatment has been applied in the past through a general doctrine of frustration. The doctrine of frustration serves as an equitable remedy for extreme events that destroyed the various bases of the contract. It applies when the performance of a contract becomes impossible. A situation may arise for which the contracting parties made no provision in the contract, and the performance of the contract becomes something radically different from that which was undertaken by the contract. This is a high bar to show that the performance is impossible. The doctrine provides safeguards similar to a force majeure without it being explicitly contemplated in the contract. There are many nuances to all of this. One of the things you should know is, like in any other contract, you have a duty to mitigate. Make sure you take appropriate actions to mitigate any delays or damage to the project. Most contracts will require you to have made a reasonable effort to avoid or minimize the consequences of impact of COVID-19. For example, if a certain supply of goods is at risk of being cut off in the supply chain, did you consider stockpiling or seeking alternatives? It's trying to make sure the losses are minimized. As Kyle mentioned, record every action, notice, identified risk to the projects, meetings where COVID-19 and schedules were discussed. Documenting all this will be critical in improving your losses, whether you're seeking relief from government, relief from insurance perspective, or potentially through litigation. In general, consider segregating or specifically identifying COVID-19 related charges, delays, and impacts in a daily impact recording note, and clearly state it's due to COVID-19. And just, I guess, moving forward, if you have contracts in negotiation, just learn and adapt. Take the key learnings from what you're seeing in your contracts right now and what may not be there, and make sure that it does show up in your next contracts. In terms of, so we're going to, again, shift gears a little bit and get into financial considerations impacting construction companies right now. Ultimately, as we know right now, cash is king, and it has not been more important anytime before than it is today. Majority of the businesses are negatively impacted by COVID-19. It is a unique situation where the situation is temporary, but no one knows for sure how long it will go on. The problem is liquidity in the market, which the government is trying to boost through government stimulus. So some of the things to look at would be your cash flow management practices, looking at government support, which my colleague will talk about in a bit, looking through your financial liquidity and what can you do to keep going. And again, one of the avenues is insurance claims, trying to see how you can recover from there. So what you should be doing right now is understand the financial impact, understand it, strategically measure it, and effectively manage it. You could be utilizing effective scenario planning by creating what-if analysis to project the impact of high probability risks, factoring key stakeholders in your financial sensitivity analysis, be it lenders, project owners, subcontractors, equity holders, and your other partners. Track activity and cost accounting to document the impact of COVID-19. Prepare applications for COVID-19 to obtain government relief and support. Update your operational and financial models, and use cash flow forecasting to anticipate when and how COVID-19 measures will impact business. So some of the questions to ask for yourself, I guess, would be, have you prepared revised financial forecasts, including scenario analysis? Have you prepared cash flow projections based on alternative outcomes influenced by COVID-19? Have you reviewed your business insurance policy in light of COVID-19? Do you have coverage? So for the time being, I'm just going to pass this, we're going to turn over to government support, and my colleague Jennifer will speak to that.
Thanks, Chetan. I'm going to be discussing key areas of the stimulus package that was released by the federal government that really target the preservation of cash flow for businesses. To echo Chetan's comments there, we recognize that the management of cash flow in general for the construction industry can be challenging at times, and obviously now even more so as a result of the impact of COVID-19. So thought it was prudent to focus on cash relief incentives for your business. So the first opportunity I want to discuss from the federal government stimulus package is in regards to corporate and personal income tax payments. The government is allowing businesses and individuals to defer income tax payments until September 1st. So what does this mean for your business in the construction industry? Well, for any corporate and personal income tax payments, and that would be taxes that are due and installments that became owing on or after March 18th, you are now not required to make those payments until September 1st. So the idea here is that by paying or delaying the payment of these taxes, additional cash will be available to you now. The second opportunity I want to raise from the federal government stimulus package is the temporary wage subsidy for employers. Now, this measure allows eligible employers to reduce required remittances of payroll source deductions to CRA. And it's for a period of up to 3 months. And from a cash flow perspective, this subsidy can provide additional cash of up to $25,000. The subsidy is available to individuals, partnerships, charities, nonprofits, as well as Canadian-controlled private corporations. So I suspect a lot of you on the call this will pertain to. So there was an update on this subsidy this morning with some significant changes to the program from what was posted on the CRA website last week. For Canadian-controlled private corporations, the subsidy will only be available, and this is key, to those that have taxable capital employed in Canada of less than 15 million, and this is on an associated group basis for the last taxation year that ended before March 18th. In addition, the Canadian-controlled private corporation must have had a small business limit in the previous year. And if only one corporation in the associated group claimed the small business deduction in that year, that company is the only company that can claim the wage subsidy. So a lot of important information there, and I would recommend reaching out to your tax advisor, particularly for those bigger groups, to really just understand if a small business deduction was claimed and what the taxable capital levels are for the associated group of the prior year to ensure that you are eligible. And if you are eligible, the subsidy as of this morning has changed from 10% to 75% of the remuneration you pay, up to a maximum of $1,375 per employee and to a maximum of $25,000 total per employer. So with the increase to 75%, the intention here is to allow employers to maintain more cash sooner. The employer will need to calculate the amounts per pay period to determine what the reduction is. And so I want to emphasize that with this subsidy, the government will not be sending checks, but instead employers are to remit less than they otherwise would based on the amounts that are calculated. Given the updates this morning on this program, I would expect further information on this one to come. I also want to note that only income tax amounts, so not CPP or EI, will be eligible for the reduction. The third opportunity I want to raise from the federal government stimulus package is the work sharing program. So this program is designed to help eligible employers avoid layoffs where there is a temporary reduction in the normal level of business activity that's beyond control of the employer. And I'm sure a lot of you are experiencing a slowdown as work projects become staggered. You may be minimizing the number of employees on the site because of social distancing considerations, and probably having to deal with a lot of workers that are just choosing not to come in because of the risks with COVID-19. So this program may be a good option depending on your circumstances. There are certain eligibility requirements that have to be met in order to participate. I'll highlight a few. One of them being that it involves both the employer and the employee agreeing to a reduced work schedule. The business is required to demonstrate that there has been a recent decline in business activity of approximately 10%, and the work reduction of employees must be on average between 10 and 60% for the duration of the program. And the program maxes out at 76 weeks. In the interest of time here today, I've included the link that provides more information about the requirements of the program. The cash benefit here with this one is the money saved by having lower wage costs, while employees can benefit from both EI and their reduced wages. And the last opportunity I want to highlight from the federal government stimulus package is in relation to the financing programs. The business credit availability program is really meant to help cover cash shortfalls over the next 6 months And there's also a working capital program, which is a 36-month back-end loaded loan with principal deferment for the first 12 months. I would say that businesses that are seeking for support should first contact their financial institutions for an assessment of their situation. Now, BDC will want to understand how the bank would view the debt, as well as understand what support they are getting from their bank at the time. There's also a Canada Emergency Business Account benefit for small and medium businesses, where they can receive up to $40,000 in a loan that will be interest-free for the first year. So more information coming out frequently, and I have included a link that also provides additional details with respect to these programs. So those are the programs that I wanted to highlight today. We are really hoping to see additional relief from the government that can get more cash in your pockets. And just keep in mind that the information and programs are changing frequently. So please feel free to reach out to me with any questions or concerns as things change and progress. At this time, I want to highlight at a very high level a few strategies from a tax perspective that can be taken now to minimize taxes in order to enhance the overall cash flow for your business. Capital loss planning. If you have an investment portfolio, you would be seeing a substantial decline right now, and there may be an opportunity to trigger those capital losses in 2020 and carry them back up to 3 years where there was capital gains, and you can recoup that prior tax that was paid. We can also get creative and look at triggering a deemed year end through an amalgamation, for example, so we can get the refund back sooner. And when considering that, before triggering any capital losses, you also should be mindful of the impact that it can have on your capital dividend account, which I'm sure a lot of bells are ringing out there for you. The capital dividend account is that account balance that can be paid from corporations to shareholders as a tax-free dividend. And so it may be prudent to pay out any capital dividend account balance first before triggering any capital losses. Another planning consideration is an estate freeze. Now, an estate freeze is ideal when the value of the business is at a low. So for those that aren't familiar with the concept, completing an estate freeze on shares of a corporation effectively locks in the value that's attributable to a business owner and provides the opportunity to minimize the tax that will arise on death. And then for any future increases in value of the company, that value can then accrue to other individuals, such as beneficiaries of a family trust. We know that in the construction industry, liquid assets may be limited to cover estate taxes, so planning ahead can assist with mitigating that tax exposure. And well, for those businesses that have undergone an estate freeze previously, you may want to revisit refreezing the company if the value of your business has declined since that last freeze. And finally, consider transferring corporate installments to HST or payroll accounts. You may have overpaid in corporate income tax installments that have already been submitted. So if you're estimating your taxes to be lower because you've experienced a decline in revenue during these difficult times, if that's the case, you may want to consider transferring those corporate installment balances to your payroll and HST remittance accounts, since these accounts continue to be due and payable. And before undertaking any of these types of planning strategies, we strongly advise that you speak to your tax advisor, and I'd also be happy to go over any of these strategies in more detail if you want to reach out to me after the webinar. I'll pass it back to Chetan to talk about insurance.
Great, thank you, Jen. Lots of good information here, and I know we want to leave some time at the end for questions, so we might speed up a little bit here. We have a lot of good content. The discussion will be available online, I believe, from a recording perspective, so you can revisit it at your convenience. So just jumping back into a little bit on the financial side, what can you do to weather the storm right now? One of the avenues you want to be looking at is your insurance policies. We recommend reviewing all your insurance policies. You may have different ones by projects, but within your corporation, within project, within joint ventures, you may have to see if there's any coverage available for COVID-19 impact. You may want to including looking at your builder's risk, normal insurance, and your business interruption policies. As with your contracts, insurance policies will require notice, and these may be strictly enforced by the insurance company. Insurers will require clear and demonstrated causal connection between COVID-19 and the claimed losses. So once again, it will be essential to maintain accurate records of events and impacts, document everything. There will be various policy wordings. There are various nuances that may be different between your businesses, but different even between projects that need to be considered. We'll talk about some of these. As I mentioned, from a timing perspective, if you have a claim or you think you have a claim, you have a loss even, you want to put your insurance company on notice that you will have a claim, and details are to follow. This is very important at this point. The documenting the impact part, again, we can't stress enough. So moving on to the next section here, just again, we're not here to make you insurance experts. It's really a job for your insurance brokers, your claims consultants, and your legal advisors. But as you're, again, from a business continuity perspective and a liquidity perspective, looking at your options, we want to make sure you're familiar with some of these terms. So the commercial property policies generally provide coverage for a variety of property damage and business interruption risks. Generally, most property policies that offer business interruption coverage require a causal connection between insured physical loss or damage and the loss of income. The specific policy language at issue is key and should be thoroughly analyzed in the event an insured submits a claim under their property insurance policy arising out of any COVID-19 event. Ultimately, the key factual issue is whether the insured property was actually physically altered and or affected by the virus. This is so far in terms from a real experience perspective, this is where a lot of things are getting hung up right now from an insurance perspective, that there's no actual physical loss that the companies may be incurring or projects may be incurring, such as if you were to have a fire or a flood. A lot of these policies aren't there to address items of that nature or a natural disaster. But this is where it's really key to get legal opinion on some of this coverage, because the insurance companies have not taken a hard line one way or another, as we understand to date, but things are changing rapidly. Now, because many of the companies are not likely to have a direct claim for damage to their property due to COVID-19, they may look to other parts of the coverage in their business interruption policies. Another potential avenue for coverage that an insured, such as yourselves, may look to is an insurance policy's contingent business interruption provision. CBI, as it's referred to, insures against a company's lost business in the event the insured's customer or supplier sustains insured physical loss or damage to their property. Therefore, if a business sustains a loss because the supplier has a factory in China or another impacted place which is shut down due to COVID-19, then that business may attempt to seek coverage under the CBI provision. Again, the catch generally is that the supplier's shutdown generally must be caused by a physical loss or damage. It may be difficult to determine the reason behind why your supplier shut down or customers' locations shut down, whether they're due to physical damage or to quarantine and to contain the spread of the virus. The insured bears a burden to produce evidence triggering coverage. Now, another avenue is the most obvious one, is from business interruption coverage that policyholders may look to into making a claim arising out of COVID-19 is the civil authority coverage. Civil authority coverage allows for lost profits stemming from action of a civil authority that prohibits, prevents, or impairs access to your business, which is something we're seeing right now in many areas, especially if you've been deemed a non-essential service. Civil authority coverage generally does not require physical damage to the insured's property. Rather, the coverage is based on the interruption of the insured's business when an order of civil or military authority impairs access to the insured's property as a result of insured physical damage. Therefore, the coverage is generally contingent on actual physical property damage rather than fear of contagion. There are some policies we've seen in certain industry groups where there is a cover for communicable disease. We have not seen this often, but it's an important coverage in this COVID pandemic if you have that in your policy. So please watch out for that. There's a couple of others. I think in the interest of time, I may move on, but these are standard wordings in the policy, whether ingress, egress cover, where the access to your property may be limited. And then you have your standard builder's risk insurance as well. The key thing here is, moving on to the next slide. I know we're good here. In summary, there is no clear-cut answer on whether insurance coverage applies, but we recommend that business executives evaluate their policies, including any extensions and exclusions, with their insurance broker, legal counsel, and claims consultants to better understand the terms and conditions. Upon confirming an understanding of your policy wording and your insurer's requirements, businesses should start to document the financial impacts of the outbreak that fit within those parameters. All incremental and abnormal costs should be tracked, including but not limited to the following: cleaning and premise disinfecting costs, crisis management, communication costs to inform the public or employees, overtime pay to make up for the production losses. The incremental cost should be easily identifiable and tracked. We recommend setting up a separate general ledger account within your accounting records for recording such costs as a best practice. A key takeaway is that even if certain costs may ultimately not be covered under your current insurance programs, they can inform future risk mitigation and management strategies and may be recoverable through government support as well. At this time, I'm going to pass this back to Kyle to discuss communications.
Thanks, Chayton. So we just want to spend 2 minutes talking about communicating effectively when it comes to pandemics. I want to first off by saying anytime there's a crisis response or any level of communication, employees need to be at the forefront. They need to be the top priority for your communications. The messaging should really focus in on being on safety and the well-being of the workforce. We always recommend that you communicate early and you communicate often. Your communication should be clear and concise and fact-based. Tie as much as you can to government-related communications. What's important from an employee perspective is that you're communicating downwards with your workforce, but they need an avenue to communicate upwards as well and ask questions. Communication needs to be consistent. From the first moment of communication all the way through to the end of the pandemic, communications need to follow the same format or the same purpose and the same flow. So please ensure as you're building out your comm strategies that you're really focusing in on an effective and consistent way of communicating. It's also important to focus on communicating with third parties. When you're dealing with your supply chain, making sure that you're seeking timely information as best as you can and you're sharing timely information as best as you can. You want to communicate your requirements, your actions, your needs, but you also need to listen to theirs. You need to understand how their business may be impacted because of COVID-19, and as a result, how is that going to now impact your business? And one thing we always recommend is to determine a level of cadence with your third parties. So who's communicating with who, how often are you communicating, and when? So what triggers or events may happen that require you to get on the phone or get on email to talk about things further. So that's just a quick overview of communication. It's really, really important, and I can't stress enough that you need to focus on your employees first and foremost. That's where you need to start, and you need to ensure that it's really focused on the safety and well-being of those individuals. So that really concludes what we're hoping to cover today. We're going to go to the lines. A few questions have come in, and so we're going to spend the next 10 minutes or so answering questions as we finalize our presentation. So the first question we have coming in here is about sensitivity analysis. It says, can you please share some insights on sensitivity analysis? Maybe I'll give some response first, and then Chayton, if you want to add to it, I mean, by all means. So
Okay.
for me, sensitivity analysis is about understanding what the triggers may be or how your business may be impacted because of COVID-19. What's really important is to focus on best case and worst case scenario. It's important to focus on many different triggers or many different events or hypothetical situations that could take place. You'll want to look at things such as project delays, timelines, financial considerations, and weaving in what those cash flows may look like pending on the duration of the pandemic, the duration of the delays, as well as what vehicles such as government funding or triggers you can turn on to help supplement your cash flows. I think that's probably, from a high level perspective, what I would consider as top priority. Chayton, anything to add?
Exactly. I think I was going to focus on the cash flow side of it as well. I'm glad you did. So really, your lenders will want to know from a financing perspective, what does your business look like if scenario A, B, or C were to occur? And I think, as Kyle mentioned, understanding how your projects are being impacted from a timeline perspective, how is it being impacted by what government support might be available, where you can recover some of this, potentially through insurance. All those scenarios may need to be baked in making those liquidity type decisions and financing decisions.
Perfect. Jen, a question came in here with regards to tax. I'm going to push to you. The tax deferrals that were being talked about, do they apply to remittances of payroll source deductions?
Thanks, Kyle. As of today, there's been no formal information on deferrals for remittances of payroll. I will say, however, for Ontario, I understand that from April 1st, 2020 to August 31st, 2020, interest and penalties will be waived on missed filing or remittance deadlines. That was mentioned and announced this morning. I also understand that as of today, GST, HST payments can be deferred now until June 1st. However, because this information was released today, more information is expected to come on the details in these areas. So I would really advise on waiting to get the additional details before making any decisions to delay payments. I've also seen that in BC, if you're in BC in regards to PST, the filing and payment deadlines are now postponed until September 30th.
Okay. Third question that came in is it mandatory to incorporate force majeure in all construction project contracts?
So I'll take that one. In terms of being it mandatory, it's not mandatory, but it is a best practice. If it's not there, then you can fall back on the doctrine of frustration to help you in sort of act of God type scenarios. But it is recommended you have a force majeure contract and adopt it carefully to your situation, to your project's needs, where you think the project could be impacted.
Okay. Jen, another tax question coming in. What about GST due payments? Can they be delayed?
So GST announced today, those payments can be deferred until June 1st. And like I said, if you're in BC, I understand that PST is able to be delayed until September 30th.
Okay, perfect. And seems to be quite a bit of tax questions coming in, of course, with the government stimulus package. Where can we attain more information and gather more information regarding the payroll deduction subsidy?
Sure. The Canada Revenue Agency had a site on there giving more information about the wage subsidy program. Now, as of this morning, it's outdated, so I suspect they'll be updating that soon because it's still indicating that it's 10% of the remuneration paid, which as of this morning, as noted, it's now 75%. So I think just because the information is changing so rapidly, people aren't updating their sites to keep you up to speed on things. So hopefully in the next day or so that will be updated, but you can go on the Canada Revenue Agency's site, and if you look up wage subsidy, you should be able to find the information that you need.
Great, thanks, Jen. Next question that came in says, are you tracking or estimating the financial impact of the slowdown on the construction industry, ideally across Canada, but any jurisdiction would be, I believe it says advantageous? Maybe I'll take this one. And what I'll say is, although it's early days, we're continuing to follow market reports and stay up to speed with what's going on. We have significant amount of construction clients that are dealing with these significant impacts right now, and anything we can provide and with regards to support as to how things are going to affect the industry is really, really important. And we do share that. One thing I'd like to say is that a lot of the economic factors play into your scenario modeling or your financial modeling in times of crisis. So anything that we see as valuable that can be passed along is typically what we do. And it's something that as an organization, I would really, really look into the market from an external perspective to help build out those scenario models. Okay, I'll just see if there's any more questions right now. Another question coming in here. The 75% wage subsidy is capped at $1,375 per employee and $25,000 per employer. Is that correct?
Yes, that is correct. So they did change the percentage of remuneration to 75%, but for whatever reason, they've left the limits at what they were before, being the $1,375 and $25,000.
Perfect. And then the last question that we'll address today, given timing, is how do each of the province specific measures affect the federal proposed guidelines? Are there different rules to apply to each province?
Yeah, I guess with that, I would say, yeah, keep an eye. There are differences among the different provinces. They're giving out different initiatives. For example, in Ontario, I've seen them increase the EHT exemption limit. BC's offering deferrals on EHT. So, and you know, Nova Scotia, New Brunswick, Quebec, they're providing different incentives with respect to deferral of payments on loans. So I would really just, depending on whatever province you're in, keeping an eye on the different changes, because there are differences across the different provinces. And I mean, I didn't get into those today just because it was a national call and in the interest of time, but I would, you know, advise looking at those and following up with your local contacts, and happy to go offline and get into more specific discussions on the various provincial programs.
So I think that wraps up our hour, 3 o'clock on the dot. We wanted to thank each of you for calling in today and spending an hour with us as we talk about the future of construction and the impact of COVID-19. Honestly, thank you so much for joining in. If you do have any questions, please feel free to reach out. And at this time, Kenny, we'll pass it over to you.
Awesome. Thank you, Kyle, Chetan, and Jennifer, for your valuable insights. I think the questions that kept on coming showed the amount of value that we provided. So thank you once again to you and for BDO for sharing those insights with us, with the Canadian Construction Association today. Just a reminder, our second webinar on the series, and somebody asked this question as well on the economic terms. So our second webinar on the series, Navigating COVID-19, is on next Thursday, April 2nd at 2 p.m. We have Peter Hall, the Vice President and Chief Economist from Export Development Canada, on that call to answer questions on the economic update. So it will actually focus on what you need to watch as the outbreak continues to unfold. We will be focusing on taking stock of the current economic situation. What will be the signs that things are continuing to get worse, or if they're getting better, which we are all hoping for. And of course, importantly, how much is the construction industry likely to contract, and how likely or how quickly it is likely to recover. So we hope you would be able to join us. We will actually send you a follow-up email. Somebody did ask a question whether we can have this deck available. We will have this deck available for you along with the recording. So thank you once again for joining us for this webinar, and we hope to see you next week on the series as we provide a quick economic update where things are standing as of now. So thank you. Enjoy the rest of the day and the weekend, and of course, importantly, stay safe. Thank you so much.